So there's some really interesting contrast between the bank economist and the Canadian real estate economist in what's going to happen in the real estate market in 2023. And by the way, after a year where housing sales fell by 25.2%, CREA, the Canadian Real Estate Association, and TD Bank are suggesting that Canadians are going to continue to feel the pain in 2023 when it comes to housing prices. And that's thanks to the steep interest rate increases that happened in 2022 that will continue to have a cooling effect on the Canadian real estate market, especially in Canada's biggest provinces. In fact, TD Economics is predicting that sales will continue to decline substantially across Canada, even though CREA's forecast is slightly more rosy. But before we get into all the details, my name is Nolan Mathias, and if you want to thrive financially, this is the place for you. So go ahead, click that subscribe button and hit that like button so more people like you can see this video. And don't forget, I'm giving away my new book, Mortgage Secrets, to the first 500 people who go to mortgagesecrets.ca and pay the shipping and handling in order to get it. So if you want to get it, head to mortgagesecrets.ca before they run out. Okay, so this week, CREA, otherwise known as the Canadian Real Estate Association, released their 2023 housing forecast. And while they're predicting that certain markets aren't going to perform well in 2023, the markets that they are predicting will continue to decline might surprise you. And on top of that, TD, who released their forecast in September of 2022, also released an updated press release with respect to their forecast for 2023, and their numbers are substantially different than those coming out of CREA. In fact, TD pretty much across the board has predicted that almost every real estate market in Canada will decline in 2023, although they've also predicted that the market will probably bottom out late this year. But this in my mind is a really interesting contrast because we have a bank that is forecasting pretty significant declines in Canadian real estate, and then we have the Canadian Real Estate Association, who you would think would have the best data and the best access to the information that would be needed to make these predictions, predicting a significantly rosier future than what TD is. And there's one specific area, which I will get to a little later in this video, where their predictions are significantly different, and that is likely what's leading to the major differences between TD and CREA's predictions. So let's jump in here and take a look at the actual press release from CREA, and I'm going to show you the charts first and foremost, specifically this one here with respect to sales activity. Now, this is an interesting chart because what you have here is you have the 10-year moving average, which is the red line, and then you have the historical sales activity, which is the blue bars, and then the dark blue bars are the forecast. Now, here's what's interesting, is they're suggesting that the 2023 activity for home sales is going to be fairly similar to what it was in 2022. Now, this is interesting because those first couple of months of last year were significant months with respect to the number of sales. So suggesting that 2022 and 2023 are going to be similar is suggesting that we're going to see some increased sales activity through 2023. Not a lot, but a little bit. And then where it gets really interesting is that they're suggesting that 2024 is going to come back above the 10-year moving average. And what you'll see a little bit later on here is that both TD and CREA are suggesting that 2024 is going to be really, really good years with respect to Canadian real estate. Now, I think there's two things that are really interesting with respect to CREA's assessment here of the 2023 real estate market. And that is first, that they believe that the uncertainty with respect to interest rates is in the rearview mirror, and that's going to lead to stability in the Canadian real estate market. Now, here's the thing about uncertainty is we don't know if we're going to be uncertain until we're uncertain. So as of right now, people have pretty much settled into the fact that we're around the 5% interest rate range when it comes to mortgages in Canada. And people are now making their buying decisions based on those interest rates. And if they're making stage of life buying or selling decisions, those interest rates just become a factor in the decision to buy or sell. However, that decision will still be made based on what's going on in their life. Maybe it's they have a newborn on the way. Maybe it's they have kids that are leaving the house. Maybe they don't like their commute, or maybe they just have crappy neighbors and they want to get the heck out of wherever they live. So a majority of the moves that will happen in 2023, in my opinion, are going to be those stage of life moves. And there's a significant amount of first-time homebuyers who are still waiting to get into the market at lower prices. Now, I have bad news for first-time homebuyers because what CREA suggests in their news release is that affordability is not going to get better for those first-time homebuyers. And that is largely to do with the shift from high prices and low interest rates to higher interest rates and lower prices, which are pretty much canceling each other out. In fact, they're not even quite canceling each other out. If you look at the numbers now, it is actually more expensive to purchase a house because housing prices have not come down enough to compensate for the higher interest rates. And what we know about this relationship between interest rates and housing prices is that when interest rates increase by 1%, it decreases buying power by about 10%. So a 3% increase in interest rates should have about a 30% impact on housing prices. However, that impact has not been felt in its entirety. So first-time homebuyers who are getting a lower price on the house are actually going to, in the long run, end up paying more for that house because of the higher interest rates. And even with these higher interest rates, CREA has forecasted pretty modest reductions in housing prices. So if you take a look at their forecast chart, and I'm going to get to the difference between this one and TD's in a second here, what you can see is across Canada, CREA has suggested that housing prices are going to come down by about 5.9% in 2023, with the most significant declines coming in Ontario and British Columbia, 7% in BC, and 8.7% in Ontario. Now, keep that in mind when we get to the TD numbers, because what you'll see is that these aren't necessarily the provinces that TD thinks are going to suffer the most. But with respect to overall price forecasting, most of the provinces in Canada CREA is seeing are going to go down, but there are some provinces like Prince Edward Island, Newfoundland, and Alberta that are expected to go up in value in 2023, at least as far as CREA is concerned. Now, I want you to remember that when we get to the TD numbers here, because TD's numbers are substantially different, and they do not believe that any of Canada's real estate markets are going to perform in the positive in 2023. So let's take a look at the TD numbers here. And if you take a look at the TD numbers, this is where, like I said, it gets interesting, because TD's predictions with respect to housing prices are that they're going to go down by 10.7% across Canada. This is almost double the decrease that CREA is predicting. And as you can see, there's not a single province that they're predicting is going to be in the positive. And what's really, really interesting is that some of those markets that CREA thinks is going to outperform the rest of Canada, TD Economics is predicting they are going to be some of the worst performers. And by the way, Ontario and British Columbia, which are expected to not perform well, aren't necessarily predicted to be the worst performing provinces as far as TD is concerned. So where does that all leave us? And what I want to show you is I want to show you the differences between the two forecasts here. So let's start first and foremost with the average sales forecast and just take a look at the difference between CREA and TD's forecast. So first and foremost, with respect to sales, there's about a 17.5% difference between CREA's forecast with respect to sales and TD's forecast. CREA is suggesting that sales in Canada this year will be pretty much flat. TD is suggesting they will be down by almost 20%, 17.5%. And then if we start breaking this down into the individual provinces, CREA suggests that British Columbia's sales are going to be up slightly, TD down 22.8%. CREA is suggesting that Alberta sales are going to be down about 5%. TD is suggesting they'll be down 20.9%. Saskatchewan sales are expected by CREA to be up 2.3%. Look at this. TD is suggesting a 14% decline in Saskatchewan. In Manitoba, this is the only province where CREA and TD agree on what's going to happen in the real estate market, and that is that Manitoba is going to have an 8.3% decline in sales. Then if we start getting into Ontario and we start getting into Quebec, TD is suggesting that these markets will be down 15.5% compared to pretty flat in CREA's predictions. And then these are the ones that really, really interest me. This is New Brunswick, Nova Scotia, Prince Edward Island, Newfoundland. This is the area where TD is suggesting a significantly different market than what CREA is forecasting. And if we get into the average sales prices, I want to point these out because CREA is suggesting that all of these markets are going to be pretty much flat or slightly positive, and TD is suggesting that they are going to feel the pain. So there's some really interesting contrast between the bank economist and the Canadian real estate economist in what's going to happen in the real estate market in 2023. And by the way, if we look at British Columbia and we look at Ontario, TD has these forecasted both significantly worse than what CREA does. And here's the really interesting one. Alberta seems to be the one province where economists pretty much agree this is going to be a bright spot in the Canadian economy in 2023. And TD, however, is expecting that housing prices are going to decline substantially in this market. And I never really understand this, but whenever you get Canadian bank economists, for some reason, when it comes to real estate, they always expect that Alberta, Saskatchewan, Manitoba are going to fare far worse than what they actually do. Now, what do we make of all this? Okay, so first and foremost, I'm an economist by education, and what I need to disclose to you right out of the gate is that these are just forecasts, and they are very likely both going to be wrong. Now, TD is obviously forecasting a significantly more pessimistic market than what CREA is. There's probably a reason for that. If you take a look at the Canadian Real Estate Association and what they do for a living, they're there to support realtors across Canada. So predicting an awful market could become a self-fulfilling prophecy. So they probably have some bias with respect to a more positive outcome in the exact same way that for whatever reason, the banks in Canada have a negative bias when it comes to Alberta's real estate market. But the question is, where exactly will we fall with respect to the actual predictions and what actually happens in 2023? And the answer to that is that nobody knows. And what always happens with respect to forecasts is there's always a surprise. There might be a surprise to the positive in 2023. There might be a surprise to the negative in 2023, but you can probably rest assured that both of these forecasts are probably going to be significantly wrong when we look back at them in a year. Because like I always say, economists just generally tend to get things wrong, and then they go back and they take a look to see why they got it wrong the following year, just like a weather forecaster would do when they're predicting the weather. So this is not a perfect science, but the question is, what do you do with this data? Well, if you're getting into the real estate market and you look at these numbers and you say, okay, looking at the forecast, if I'm in Manitoba or if I'm in Quebec, where pretty much CREA and TD agree, there's probably some downward shifts that are going to happen in the early season of the market. So maybe later on in the year might be a better time to purchase. But in areas like Alberta, New Brunswick, Nova Scotia, where there's a pretty significant difference between what is forecast by TD and what is forecast by CREA, well, those markets, you're probably going to have to make a little bit more of a judgment call with respect to whether or not you should be buying now or waiting until later in the year. But at the end of the day, the old adage that time in the market is better than trying to time the market will probably be true. And if you try to time the market, there's a really good chance that you probably are not going to get it right, and you're probably going to make a bad decision. Because anytime that somebody tries to time a market, it often ends in failure. Because if people and economists were good at predicting the market and timing the market, well, we'd all be millionaires. And by the way, if you are looking at getting into the market and you want some of the best education on real estate in Canada, check out my Homebuyer Masterclass at homebuyermasterclass.ca. And if you're looking at getting into the market, there's a really good chance that you need to decide between fixed and variable rates. So I'm going to link to this video here, which will help you choose between the two in 2023.